So I think that there's just so much, not just demand for the products that these guys have, because obviously cloud, we know how big that is. But what they're providing now to really go directly at Amazon is they're purchasing this company, CyberX, and that will be additional security on the Azure platform for their cloud delivery and so forth. So end-to-end security, Scott, is something that we're all going to be concerned about. It's one of those issues that, plagued briefly, very briefly, Zoom video earlier this year. And now the fact that these guys are really addressing this, I think cloud-based security is going to be huge. Microsoft is clearly leading in that right now with this addition to their offerings. And I think that when you're in, I'm in every one of the names that we're looking at here of these mega caps, except for Google. And the only reason I've shied away from Google is it's a really tough trade. I don't mean you can't just buy and hold it, but I mean all of the various parts of Google are really expensive, and thus the spread between bid and offer, Scott, is just discouraging for a trader, not for an owner. If you just want to own it, I understand, but as a trader, that's a tough one because you're giving up so much getting in and out of that stock.
These tech names right now are moving towards the highs of the day. Steve, it's interesting, okay? In the last month, let's say month or so, you've had members of our investment committee come on the show and say that they've taken some profits in Microsoft, that they've taken profits in Apple, and even as Joe did recently in Amazon. Are those going to, I mean, they were good short-term, if you saw the value trade, reemerge. Are those going to prove to be foolish moves? Is the market telling people who did that those are the wrong moves to make?
Well, I never know what somebody else has in their portfolio and where they've allocated the capital. So I don't know if they'll be foolish, but if your question is, and I think it is, are those going to continue to go up? I believe they will. To come on to what I think will be their biggest product launch ever, which is the 5G phone. We just saw Ericsson last week increase their estimate of 5G phones from 100 million to 190 million this year alone. Now, most of that's in Asia. We saw Samsung is coming out with a lower price 5G phone. So what you're going to be able to do with that phone is going to be incredible. So, no, I don't think it's misplaced with Apple. Are these stocks possibly ahead of themselves? Well, they could be. I did shave a little Apple a little while ago, but it's because it just got too big. It's still my largest position with Amazon and with Microsoft. And Microsoft continues to innovate. There's much more going to the cloud than there ever was. And John's right. You have to expand that to security. And if you take a look what those stocks report in the first quarter, like FFIV, security business is very, very strong and getting stronger. So, look, I think there'll be regrets, but when you made a lot of money, there's nothing wrong taking
No, of course not. You're not going to say, well, you made a lot of money, you took little profits, shame on you. But the point I'm trying to make, Joe, is like the one you made in Amazon. Do you regret taking profits and selling out of Amazon when you did?
That's a simple answer. If you sell Amazon, which I think I sold it somewhere around $26.50 and it's now printing $26.96, I'm an idiot. Of course I regret it. Did I have to do it at the time in terms of managing my risk? Yes, I did. But listen, unequivocally, when the stock moves higher, and I've said since I sold it, there's no reason why it will not continue to move higher. It's one of the best companies clearly in the world. It's one of the best companies that an investor can invest in. I've got my Apple, I've got my Microsoft, but yes, I regret I don't have my Amazon.
But okay, so this is an interesting debate that I want to have now for our viewers.
Sure.
In terms of managing risk by selling out of a stock that you just made a case for with so many reasons as to why the rewards are still ahead. So why take risk off the table in a name like that where there's so many other places that are seemingly so much more uncertain than an Amazon, or for that matter an Apple, or for that matter a Microsoft?
So to answer that question, and I think John, Liz, and Steve really all understand this, and I would literally have to sit with you, Scott, and show you my sheets and say, okay, here's where I am. So looking back about 2 weeks, I realized that I had way too much exposure to growth and way too much exposure to mega cap technology. If you remember, over the last 3 weeks, I've been talking about that I did not want to go and buy what I called the dash for trash. I didn't want to buy the airlines. I didn't want to buy the cruise ships. I didn't want to take that hyper-cyclical trade in non-quality companies. And I was expressing to you a frustration that I really couldn't find any other opportunities quality-wise to enter into stocks. Now, as Amazon and as Apple and as Microsoft continue to push higher, your risk increases more and more and more. What I had to do, I was forced to do, the portfolio was telling me to do it, was to take off some of that risk. I reassigned some of that risk into healthcare, which I believe in, when we've got a Russell rebalance coming up on Friday, and I believe a lot of the biotech names in healthcare are going to be winners in that rebalancing. So I put some money, and Steve and I talked about it at the time, in Seattle Genetics. I've had XBI for a while. So it's a great question. You're asking an obvious question, but it's a little bit more detailed than that, and it relates to a person's particular portfolio. And unfortunately, I'm not managing Warren Buffett's portfolio. My individual portfolio is not as big as his.
Sure.
If it was, I would have never sold Amazon.
I hear you, but Liz, I guess, part of my point is if you are selling names like that, how are you going to get back in, right? It's like the Kramer don't trade, own Apple, because if you trade it, you run the risk of missing the opportunity. How are you going to know when to get back in? And Amazon's a good example of that.
I don't know that
you're out at $26.50. You take profits. Now you're at $2,700. The high is only $27.22.
Right. So I don't know that the question is, if we get out of one stock, do we want to get back into the same one? If you just look at portfolio construction generally, the first three ingredients into those decisions are, number one, what's your return objective? Number two, what's your risk objective? And then the third one is, what's your time horizon? So to Joe's point, if he had already spent his risk budget in other places and he was meeting his return budget cleanly, there's no reason to continue to take risk in a concentrated way. You can spread out that risk budget, diversify a little bit more into other sectors, maybe a smaller cap name, and then you have to think about what's your time horizon. And I do agree that over the long term, these stocks will be higher. I don't think anybody on this desk or on this show right now would say that we expect stocks to go up in a perfectly straight line. We don't. We know there are going to be little pullbacks here and there. We know there are going to be mini boom and bust cycles as far as valuations go. But if you have a longer time horizon, you can buy and hold these names. It's a matter of understanding your risk tolerance and then what's the time horizon of that risk tolerance. And it sounds like Joe's time horizon of that risk tolerance was a little bit shorter, so he took it off the table.